Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Brianna Valesky, and we have Serge Berger on the line. He is head trader and investment strategist at the Steady Trader. Serge, how you doing this morning?
Good morning, Joel. Good to be on.
Okay, let's just get right into the market here. I had the jobs number on Friday. Muted reaction, got the nice break, but kind of just battled back here. Let's just talk about your take on the number and the indication for interest rates.
I think, for the indication for interest rates, it's more or less what we talked about last week. Well, it's been somewhat more volatile to push higher, right? But I just continue to sense that, for one, jobs data is a bit of a lagging indicator. And so interest rates are probably doing a little bit of overshooting. And if you kind of go back, there have been plenty of times when, uh, you know, interest rates jumped ahead of in anticipation of a hike of whatever sorts, even if it's just 25 basis points later on this year, and then ultimately really retraced 50 to 80% of that move. So I don't think rates are necessarily going to go higher in a straight shot, but I do think they will. My base case is that the lows are in for where the highs were in for bond prices and lows for yields for 10-year.
Okay, let's talk about large caps versus small caps here. The small caps has shown some strength here. What's your take on that?
Mm-hmm. Yeah, I sent the chart over, and I continue to think that in the bigger picture, the multi year, like I forget now, it's like 10 or 15 year relative strength break of small caps versus large caps. In other words, small caps have gotten weaker and have broken a real long term relative chart. I continue to think that's going to ultimately drag on the market. But in the meantime, you see a really good move by the small caps versus large caps. And if you look at the Russell 2000, for example, also in absolute terms, I think it looks pretty darn good, right? I mean, I think it doesn't take a genius to see the technical the technical juncture there, right? If we can, kind of maybe get past last, what do you want to call it, last Thursday's highs, maybe. We might be able to get a little more jig.
Okay, all right. Let's move on. The financials, showed some good strength on Friday. Some huge buying balances here. Do you have some of your favorite financials that keep an eye on?
Yeah, so I bought Bank of America in a very publicly announced matter last week, and that's been working out quite well. There may be a smidge overextended here, but the banks have also in relative terms, the financials actually have showed relative strength for most of the year, and I do think that'll continue somewhat here. I'm assuming at least for another couple of weeks or something like that, unless the FOMC statement next week totally sticks a wrench in it. But I continue to think that trend will work, and it's just again, it's mostly just because rates are have slowly risen. So Bank of America is one. I think if you look at the KBW Bank Index, that's BKX. That's looking really nice. Regional banks, if you look at like the KRE, which is the regional banking index, that had a nice breakout last week. The stock I like there is Fifth Third. I think it's FITB. It's a relative strength play for me. There's not a whole lot of stuff working yet this year, so you got to look where there's relative strength.
Yeah, this Fifth Third here knocking on the door, this $21 level for a potential breakout to the upside. Uh, any potential here in the gold market? They had that trading range 1180 to 1200. Took that out. Got the chart of the GLD in here. Is there any reason for gold bugs here to get excited?
Yeah, so my case on gold here is certainly longer in duration than sort of the nearer term trades that we do from time to time. I think I look at gold here for one. If you wanted to get straight to technicals, there has been a multi-year positive divergence between something like the RSI and the price of gold or the GLD. And I would think ultimately that's going to give gold a boost. What gold needs is a little bit like, what I would call in 2009 stocks needed something to start finally lifting them off the lows. Gold has had a couple fake rally attempts, most prominently there in January, but it just can't get out of its own way yet. But I do think that if equity volatility picks up and bond volatility continues high, that gold is going to look a little bit better as a safe haven for certainly a few months.
Serge, you've had some experience on Wall Street and some of the big trading desks and operations and stuff and Barron's over the weekend. They kind of talked to we have all this liquidity out there, but in some of these moves that you've had in the bond market, there really
Mm-hmm.
hasn't been a lot of liquidity. What's your take on that? What are you hearing from your people on the street?
Mm-hmm. Hmm. Yeah, no, sure. I mean, I think we touched on it last time. The issue here is you have a lot more supply and much thinner staffed trading desks. That's not really a recipe for a successful sort of liquidity injection. So I think. I do think the Fed is aware of that. A lot of people are aware of that. You can even hear that on TV. So people are aware of it. The question is, can you force banks and dealers to hire more people? you know, so I think that's the issue. And if you want to talk about the risk aversion thing, people like to buy short-term bonds if it's not for some sort of duration matching or something like that. Then it's really for safety. The problem is short-term bonds. Go over to Germany and look at what those short-term bonds have done. They've gone from negative to positive back to negative. So low yield and a ton of volatility. That's not exactly very confidence inspiring. And this is sort of my base case for the next, let's call it 3 to 6 months. That I do think that is ultimately going to create some sort of instability for stocks.
Raymond James made a big call here on Walmart, trying to pick a bottom, raise it to a strong
Yeah.
buy. Ugly looking chart. You got any interest here in Walmart?
Yeah, I've been talking to Walmart for about Walmart for probably 3 weeks or so, and I'm just waiting for a bullish reversal. Quite frankly, I just haven't seen one. It continued on Friday, dumped lower again. I really, 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 really want to buy Walmart. If you look at where it's arrived at, it's a lot of price history, as you once alluded to. Uh, you know, uh, it's just I think there's a really good balance to be had here, and Walmart percentage. If you look at the interesting thing is if you look at Walmart, look at the percentage move from the January top all the way to the present. It's about 20%. That any other stock that would have been like a 40% move. So at this point it's so overextended that even if you can make you can even make like 5 or 10% in Walmart, which is traditionally a big move in Walmart, right? But at this point, it doesn't look so bad anymore. So I really would like to buy Walmart.
And sometimes you see a trend where one Wall Street firm comes out on it, and then another one does, and kind of gets the ball rolling here. Raymond
Yeah.
James is the first one to stick their head out, so we'll keep an eye on the trading activity here in Walmart for sure. Moving on to some other stocks with news out. Mickey D's trading range 90 to
Mhm.
100 seems like forever. Restructuring. Any thoughts on Mickey D's?
Yeah, I think McDonald's to me is one of those things where I just can't give up on it. I just think they'll find a way. I have a really hard time to imagine a company like that is gonna just hang them up. It's more a matter of getting investors back in terms of confidence. And I think we talked about it last time. It's a classic stock where I just can't find anyone that likes the stock. I mean, literally, there's not a single person out there that I tend to talk to that likes the stock. So to me, that's kind of an early indicator for a stock that maybe it's going to start bouncing at some point pretty soon. I mean, technically, it's had like what a quadruple top at this point, and those tend not to last through a longer term lens.
Okay. Second biggest stock in the S&P 500 index, ExxonMobil, had been holding a major support level here on the dailies. We broke that down. Any thoughts on ExxonMobil?
Well, still very much oil dependent, and it's just been it's actually been disappointingly underperforming some of the other oil markets. I don't know if I want to short something. I mean, it does look itching to short right at these levels, and I see that, but it's also dropped for like what a month straight now. So I'm just not sure this is your best risk reward. Again, I'd probably wait for bullish reversals to buy it or then short it into rallies. It just feels like we're one of these markets where you got to do basically the opposite of your instincts, right? So chasing breakouts hasn't worked. So you got to sort of blindly buy into these sharp sell-offs like a Walmart, or then like in an ExxonMobil kind of short the bounce, right, and not the breakdown.
Okay, Apple has their big developer conference today. Trading unchanged here, was trading up in the pre-market here. I don't know, kind of a well announced, what they're going to do at the developers concert, the streaming music. You looking for any surprises there? And what's your take here on the biggest stock in the world, Apple Computer?
Twice the size of the next one, right, which was Exxon,
Yep.
in terms of market cap. So the levels I'm looking at specifically is 133 in the upside, 126 in the downside. If we see daily close below 126, I see 118. If we get above 133, I see 140. The catalyst horizon or the catalyst calendar is sort of, at least from my understanding, is very very thin. So it's either this week, there's a whole week of a conference and there's a ton of headline risk for the stock to move, or then we wait until earnings, which is basically the second half of July. So if the stock can't move right now, I just don't see how it's going to move until the earnings. So it's like it's got to get something going now, or I'm not going to look at it again until July, because that range it's been in has been great for options trading. Selling put spreads at the top and buying. Call spreads at the top and buying put spreads at the bottom. But other than that, I just think this has been frustrating.
Yeah, it has. It has. Definitely looking for another catalyst. Let's take a look at Sears Holdings here. Wild stock has a big range. Numbers weren't that good, but was holding up in the pre-market. Now sellers are now coming into the issue, actually knocking on the door of some major support here in the lower 40s. Is this something that you track at all?
I follow to the extent that there's news, and I tell you though, it's been a frustrating stock to trade. I haven't touched it in a while, but I remember trading a little bit late last year, and it was just because there was some volatility. It's the last time there was real volatility. I don't know. Do you have anything major on this? I just can't get
No,
my head around.
I mean it's a thin stock and it whips around. Brian Sazi was called the I think concerning or I mean just I don't think they lost as much money this quarter, but you have to just wonder about it. I don't not something that I dabble in. Casino stocks here. Bad news coming out of Macau. This has been a pretty steady trend here. These stocks have been underwater for quite some time. Got hit this MGM. Are these casino stocks worth a look down here, or just better places to put your money?
I like Win. I mean, Win's just it had that 1 day pop last week, and now it's gone back. I'd like to see some stabilization after that. If it can stabilize, I'm not going to touch it again. But Win to me just looks so horribly beaten up. And again, I get it, the Macau thing, and they're trying to crack down on all sorts of shenanigans over in that town, and so I get it why Win's getting destroyed. But I mean, come on, look at this chart. It's just a straight shot lower for, let's call it, the past. Since March 2014, right?
Yeah, yeah, yep.
It's just to me, it's just extended. But again, it's honestly, it's kind of like Walmart, and I know this sounds silly because it's a totally different thing, but I just need to see some sort of commitment, And so far, like that's why I didn't buy it last week on that pop. I just needed to see more than a 1 day, breakout fake out move like we had on I guess that was last Thursday, right?
Yeah, and now look at this though. I mean, before it had that big run up over 200, back in mid 2012 here, I see kind of hung around this 103, 104 area. See if that acts support. It was also the area that it broke
Yep.
out from in 2011. So I'm gonna put this one on in my radar.
Yeah,
Uh,
and what's interesting also, if you look at it, like I always like to see stocks that sort of have these like tight trading ranges, like kind of like Twitter has now. And sometimes you get a move, sometimes and these are longer. So if you look at when, like say earlier this year, February through April, March, there was that straight shot down, but really really like narrow range, so to speak. Like if you were to draw a channel, right? I mean, just no volatility, just a straight shot down. And the same thing again, basically over the past month ish, the move since last Thursday. Um, so So when I see that, we're probably closer to a better directional move, and I would tend to think at this point, considering the support level you just pointed to, and the oversold on a from a momentum perspective, it's probably going to be the upside.
Okay, just any closing thoughts on the market here? We just went down and tested the pre-market low and
Mhm.
actually hit it exactly at 86.50. Have gotten a nice bounce up here. You think the market can regain its footing today, get back up in that 2100 handle?
Honestly, I really hope so. And I know hope is not a viable trading catalyst, but I tell you what, I think there are three sectors holding up this market. Financials, we talked about that. Uh, Healthcare, i.e., XLV and actually the whole biotech space, which looks good to me on the upside, the IBB. And thirdly, tech. So until those three sectors begin to show some sort of rolling over to me, I just can't be negative on this market. As many things that are concerning out there, those three things have been holding up the market, particularly the financials. And then the financials, I have a hard time going against what the financials are doing. They're just too big, too important, and empirically have just proven me wrong every time I go against them.
Okay, we've been on the line with Serge Berger. He's head trader and investment strategist at the Steady Trader. Thanks a lot, Serge. We'll talk to you again next week.
Thanks, Joel. Have a good week.